Hello and welcome to FT Trading Room. Outside the world of North Atlantic exchanges, one of the most ambitious market infrastructure projects has been an attempt to link some of the stock exchanges of South America. With me to talk about it is Juan Pablo Córdoba, Chief Executive of the Bolsa de Valores de Colombia. Welcome, Juan Pablo.
Hi, Philip.
With the project I'm talking about, Mila, let's just quickly go through what exactly it is. It's really just trying to link together which exchanges?
It's Chile, Peru, Colombia, and Mexico. It's 4 exchanges.
And it's been going several years now.
Yeah, we launched like 4 years ago with the exchanges of the 3 South American countries, so Colombia, Peru, and Chile. And this year, Mexico joined, or in December of last year, Mexico joined. So now we have 4 exchanges that have linked their equity market, so you can route orders between the 4 countries, so investors have access to the 4 countries, and very importantly, issuers. So the new company that is issuing an IPO, they register in one exchange and they can distribute securities to the brokers and the investment community in the 4 countries.
Now, sometimes some of the criticism that comes up is that the numbers are a little bit low. How do you respond to that?
Well, that is true, but we're trying to change the world here. So it's a process that's going to take some time. We've made tremendous progress in putting on the table the conversation about financial integration in Latin America, and particularly financial integration in the Pacific Alliance countries, which are these 4 countries that are in a broader integration process, economic integration process. So regulators are on board, governments are on board, and the exchanges are on board. We need to improve how the infrastructure is working so that investors and the broker community will see the benefits altogether.
Some of the things that you've actually discovered that once it's in process, that maybe in some of the ways that the trades have been routed through the brokers.
Okay, no, I think that the first thing is we started only with the equity market. And the market response has been, why just equities? Why don't we go beyond equities? So I think this is a very positive step, because by demand from the market participants, we are expanding the realm of the integration process, and now we have full support of governments. The idea is that within 1 year, we should be having fixed income securities also a part of the integration, and we're moving to mutual funds and derivatives as well. So that's, I think, very important. The other issue, I think, is the participation of institutional investors. At the beginning, we said, well, institutional investors can invest anywhere in the world, so we don't really need to do anything specific for institutional investors. But it turns out that there's a lot of regulatory issues, particularly for pension funds, that we need to fine-tune so that they can invest in a non-discriminatory way in the 4 countries.
What's the push here, though, really? Why even the need to link them all together?
Well, that's a very good question, and thank you very much, because it's the main proposition here is, in order to develop our capital markets and continue to develop these capital markets, we need to build economies of scale. Each individual country has limited number of participants, number of banks, number of institutional investors. So the market is, even though it's been growing significantly in the last 10 years, when you compare ourselves with international markets, international competitive markets, we are still very small, and we have some liquidity issues and product development issues. So creating one pool of assets, participants, investors, brokers into a single market can give us the opportunity of continuing to build and grow our markets to more liquid markets and, of course, more competitive markets for the global community.
And what about other participants, maybe Argentina, or of course the big one, Brazil?
Well, we are a proposition that is open to any country that wants to participate. Of course, we have to be aligned not just in the market purpose, but also economic policy has to be aligned. So that sort of filters out some of the countries in Latin America at this stage, but hopefully in the future, many more can join. Right now, we're concentrating on furthering and deepening our integration rather than looking at other participants. So going beyond equities into the fixed income world, both for primary issues and secondary trading of fixed income security. That in itself is a big ambitious part of the project or the initiative. As I mentioned, pension funds, having pension funds be more better participants into this marketplace, and developing a mutual fund industry for the region.
Juan Pablo, thank you very much.
Thank you.